So they put you in something inside of a retirement account with a surrender charge.
Oh, I don't know.
Oh, these guys are absolute screwballs.
There's a lot of exaggerated aspects and under exaggerated aspects of both sides.
There's always something better.
There's a lot of things that are stated in this video that are not true. All right, my name is David Hadley with Stress Less Financial. I'm a retirement specialist and insurance specialist for the last 4 years now. Today we're watching a video with Dave Ramsey asking what is an annuity and how does it work, with a caller calling in asking, am I stuck with my annuity? And it's very important that you watch this video because there's a lot of things that are stated in his video that are not true about annuities and or mutual funds and different products he mentions in there. And there's a lot of exaggerated aspects and under exaggerated aspects of both sides, and you'll get a chance to see me point those out in there so you can do your own research and become informed on if an annuity may be right for you.
Hi, thanks for taking my call, Dave. I'm so pleased to speak with you.
You too. What's up?
Well, I'm hoping you can guide me. I think I've made a big mistake. My husband and I just started doing your plan in August, and it's been amazing, but we're on baby step 2. But this has to do with an old 403B that I've had. Nothing's being contributed to it, but earlier in the year, back in April, we went to the financial planning services that my company sponsors and pays for, and they did a full workup, and I had been kind of having sleepless nights because my value would go from, I'd lose like $20,000, and then I'd get, anyway, there was a lot of risk.
So you don't want to ride the
so
market.
They suggested that I move some money, $166,000, into a traditional annuity within my 403B retirement account, guaranteed. So right now, 30% of my $577,000 that's in there is now in this annuity. And now that I've started listening to you, we're following your steps, I'm starting to realize that probably was a huge mistake.
Yeah, it was.
And I don't know what to do.
How so?
I would contact them and see if they can reverse that and put it back into mutual funds.
I wanted to stop and break that down, before he even says, like, what are they going to give you, 2% in there? He doesn't know what the fixed rate is. He has mentioned nothing about the caps, spreads, par rates, the internal components of this annuity, and also when she even needs access to this money. So he's asked her nothing about her plans and goals and tolerance here before even saying anything bad about this. But let's hear some more.
Okay, because they said it would be like a 10-year process of taking, a 10th out each year, and so then that's...
Oh, so they put you in something inside of a retirement account with a surrender charge.
Oh, I don't know.
Oh, these guys are absolute screwballs.
So I need to... it's in my 403B, and it's some kind of retirement...
So, find out what your penalties are, what your surrender charges are, and you may be stuck there. But the other thing you got to weigh it against is you're probably making 2% on this thing instead of 10 or 12.
Exactly.
And so if your surrender charge is 10%, take it and move it and put it in something that makes 10% more the first year, you recoup.
So here he actually mentions a 10% surrender charge, which is a worst case scenario on year 1 in like a 10-year. It's more if you're in a 14-year, but do you really need 10% of your money in that first year too is really a concern, and it didn't sound like she was going to be accessing 10% of her money out of her account by any means yet. And proposing that it only gets 2%, the rates are always going up and down. They're currently much higher than that, way higher. They go around 4 to 6% on guarantee rates depending on what you're looking at. Also, mentioning that mutual funds are going to get 10 to 12% is very unlikely with consistency, especially net of fees. 96% of mutual funds actually underperform the S&P 500. So if he's talking about the only 4% of them, assuming that you're in one of those, maybe being those, may be the case now, but it's not promised tomorrow, and you're still not protected from market loss. So when there's a downturn, you're not going to be hearing no 12%. You have a zero floor on annuities. So there's a time and place again for it here, at least for a portion of this lady's portfolio.
Okay, gotcha. That makes sense.
I don't know what your surrender charge is, though. The stupid thing might be 40%. I don't know.
And see, 40% here is just astronomical. That's a way to exaggerate the case and talk people away from this. This is coming from somebody that only is selling mutual funds and IRAs and term insurance, you know, so those are the only products that he actually recommends. So he's done very well for himself, but it's very biased advice.
So call them and ask them about surrender
No,
charges.
tell them that you are really upset now that you learned what it is they actually sold you, that they put you in a surrender charge product inside of a retirement account, which is absolutely screwed up. That's ridiculous. I mean, you got two sets of penalties on this money now if you need to get to it.
Right.
The government and these idiots.
And proposing insurance carriers or agents as idiots. You know, there's good agents, there's good financial advisors, there's bad agents, there's bad financial advisors, but there's a place and time in these people's portfolios for a secure bucket with zero penalties and a great opportunity for growth. And so maybe Dave hasn't been informed on what's really out there yet. So that may be part of it too.
I don't know what they're going to do, but let's see what they can do to get you out of it. Tell them you're not happy with them and we want to get you moved, and see if you can lean on them a little bit and get it moved, and then get some advice from somebody else before you make any more moves.
There's also a 30-day surrender charge or a grace period on there. Some companies it's like 3 weeks. You do have a little bit of time to make a decision, but you know, after that, if you're trying to move all your money, you would be subject to a surrender charge. So don't move more into an annuity than you need to move in any short amount of time, because that would not be a good move in that incident.
And like a SmartVestor Pro that has a clue what they're doing. So, wow. All right, let's stop a second. What is an annuity? An annuity is a life insurance company product. It's a savings account with a life insurance company.
And to say that an annuity is a savings account with a life insurance company is a very undergeneralized statement alone. It's a fixed index annuity. It's an opportunity to partake in market gains through caps, spreads, and participation rates, which can all be broken down into simple terms to understand. Nonetheless, it'd be much more of a high interest savings account that's indexing the stock market and still protecting you from any downturns, as well as it being in a safer place than the bank, being that the banks only have 250 grand of FDIC on there. Let's see some more here, Dave.
With life insurance companies. Fixed and variable. Fixed pays you basically a CD rate, 1 or 2% right now, which is what she's in.
And this 1 or 2% is very, very under-exaggerated. And, you know, he's going to take the worst case scenario that he's ever found and highlight that. And then he's going to mention, like, the best mutual fund that he's coming across, which is 10 or 12%. Kind of propose that, and that's, again, very biased advice. Currently speaking, rates just with multi-year guaranteed annuities were around 5%, sometimes a little higher. And then on the fixed index annuities, you have that zero floor, and there's even 80% participation in the S&P 500 right now in some companies. So what is out there is constantly changing, and that's why it's really important that you speak with a broker and you learn what's available in your state based on what you have available and how you can protect a portion of your portfolio with the right annuity.
Right now, which is what she's in. And it grows inside of an annuity tax deferred like a 401k or an IRA does. And you pay extra fees for the annuity. So here's what's happened.
And that's another generalized statement here. Not all annuities have fees. That's a big thing to point out. Some have 0% fees, some charge for riders in there, some have riders built in at no additional cost. So that's a very generalized statement there. There's not a fee in all annuities.
You have a tax-deferred 403B, and they moved her into a substandard, horrible rate of return that she's paying extra fees for and is also tax-deferred.
There wasn't a single time on this video that he asked this lady what her caps were, what her participation rates were, what the spreads were, or even what the guaranteed interest rate is here. So, I mean, he bashed something that he didn't even know what he was talking about there. So this is really proving right here that he's giving advice on something he's not even informed on. Regardless of his credentials in the area he has them, he's explaining something that he has no knowledge of or outright lying. One or the other.
Redundant. There's tax deferral on the tax deferral. You can't double dip on this. You get one shot at this, and she already had all that for free because it's inside the 403B. It didn't need to be in an annuity. But she got scared with her risk tolerance, with the stuff moving back and forth, and so these goobs dropped her into this thing. Well, why is that bad? Because then they put you on a surrender charge, and then
this surrender charge is only relevant during the 7 or 10 years that you start up. After that, you can leave it there and you don't have any surrender charge after that. So if you're not taking out more than 10% of your portfolio every year, then you don't have to worry about a surrender charge. You're not paying any surrender charges for pulling out 10%. There's only a surrender charge on what you pull out above 10%. So that shouldn't affect your liquidity if you need less than 10% of your portfolio or less than 10% of that annuity each year as well.
it takes 7 years to be able to get your money moved out of there without getting hit with some kind of a charge and gut punched. And so there is 0 times, never, not a case anywhere that a fixed annuity is the answer. Never.
And that's such a bold move. I have so many people that I know that are in their 60s and 70s, and they lost so much in 2008, and that was when they needed their money the most to kind of lock in, and they weren't able to ride out the market after that and wait for it to recoup. It wasn't the time for them, and that would have saved their financial livelihoods being in a good annuity at that time.
There's always something better, because a fruit jar at least doesn't penalize you when you take the money out early. And you're not making much more money on it than a fruit jar anyway. You can also do a variable annuity, which is a fine product, but not inside of a retirement account.
And that's insane to finish this video off complimenting a variable annuity, which is tied to the stock market. There's fees for all the sub accounts in there. There's a mortality and expense fee, also known as M&E fee, around 1% that you're paying every year just for when you die. And admin fees on there. I've seen clients paying 3 to 4% on their variable annuities and be losing in the market all at the same time, and it just wiped them out. So that was the worst way to end that video for sure.
The variable annuities are mutual funds inside of an annuity, and they have some actual benefits
High fees
after you've maxed out all of your retirement accounts.
We look forward to speaking with you. If you like this kind of content, especially if you're getting ready for retirement, these topics about annuities or finances are important to you, don't forget to subscribe to our channel. Hit that notification bell. Drop a comment down below. Let us know what you want to see more of. And we look forward to sending our next video out to you.